Yo, what's up, everybody? So, I am going to be explaining top down analysis to the good form, right? So, I was supposed to be giving you guys this whole top down analysis as my first video, but I couldn't do that because YouTube couldn't process it failed basically to process my video. Why? I don't know why. But yeah, I'm gonna give you guys exactly how I got my bias for today and how I understand top-down analysis and how I got to understand top-down analysis. So firstly, let me start you guys with market structure, right? Firstly, when it comes to trading top-down analysis or any type of strategy, you cannot trade without you knowing your market structure. What is market structure? Market structure is when you have basically a trend, right? But market structure, let's take it to market structure. Market structure is when you have these things right here, these things right over here. It's basically, they are called trends. Without trends, you can trade, but you cannot exactly trade, right? Because trades are the most important things that like retail traders are supposed to catch, or they uh where retail traders are profitable, right? Market structure consists of higher highs and higher lows and lower highs, basically a lower trend and a higher trend. So this right here, there's a lower trend, right? This right here that I'm doing is a higher trend, right? So this right here is your first high. That's considered a high, and that's a low, and that's a lower high because, well, let me see. This point is higher than the previous low, right? So it is considered what, a lower high, then a lower low, because this low is lower than the previous low. You understand? So it goes like this: low, lower high, lower low, lower high. That's it. There's a lower trend right here. This one is a lower trend. Vice versa, there's a high trend. Low, high, higher low, higher high, higher low, higher high, higher low, higher high. These are the most things that you need to grasp. Trends, right? The minute you grasp these things, bro, you got the market. Let me show you on an actual candlestick pattern what are higher highs and higher lows, right? These are higher highs and higher lows. I'm gonna start you from right over there, right over here. Hopefully you guys can grasp it. As you can see, this is a low and this is a high. Yeah, I mean, you can consider this as a high low, but it's not that good. High, higher low, and that's a high. I'm gonna skip this gibberish. Right here is just a choppy market, right? That's a high. Oh, my bad. Bless myself. That's a high. That's a high low. High, high low, higher high, because basically this candlestick closed above this wick, meaning that it is above the previous high, and then it gives us a higher low. That's a high, higher low, high, low, then price just up. I would also consider this one as a high low, but then we go up again, high, higher low, higher high, higher low, then there we go again, higher high, and higher low, higher high. You see it. This is how it is. This is how you get your trend. And with this the higher highs and high lows, they allow you to basically know when to enter. You see, for example, when the market makes the high low, the pause right there, this pause that it has made on the high low right there, that's where you can enter. The moment when price gives you this pause right over here, this is where you can enter. The moment you enter, you see what happens. Maybe you buy and put your stop loss maybe below right over there, and then you just let price go to your favor. Maybe you are going to target maybe that high. Who knows? That high to target it, and then afterwards, that's it. You just let price go your favor, your way, and then that's it. And then now top down analysis. Top down. Now that's where you get into your top down analysis. Top down analysis you is basically you go into your higher time frame and you go to a lower time frame to execute. When you go to a higher time frame, you're looking for buys. Lower time frames is for execution, right? And for intraday and day trading purposes, you are going to use your daily, your 4 hour, and the 1 hour. The daily is for buyers, and then the 4 hour is to get your market structure, which is also it supports your daily for buyers. And then 1 hour is for executing. The moment when you get on your daily, you are looking for buys. Remember this. 1 hour is for buys. You look at your overall trend if you can look at it properly. Going to sit down and look at it like this. You're gonna look at this like lower low, and that's lower high. Low, higher high. Because price closed above this previous what? Lower high. That's a new high. That's a higher high. High low, high, low, price broke below price below that high low. That's a low, lower high, low, lower high, low. This candle did not break below what the previous low. Understand? So it made a what? It then prices went up like crazy, which is the previous candle confirmed that okay, we have broken above these previous lower highs, which is these ones, right? Which is this area right here. This area right here. And once price did that, it gave us this new high. As price gave us this new high, which is the previous candle, it closed around the daily resistance area, which is the turning point. But the way it closed, you might not be sure, like, okay, cool. So are we buying today, which is this candle, or are we selling? Okay, you see it as open as bullish, but you need more support. Which where you're going to get your more support on your buys is the 4 hour. When you get to the 4 hour, you look at the trend. What is going on the 4 hour? 4 hour obviously clearly gives you high highs and high lows. You understand? So when I got to the 4 hour, I saw the 6 a.m. 4 hour candle. I was like, okay, cool. I'm waiting for this candle to close. Once this candle closes, I know on the 1 hour it's gonna give me something, which is a date on the 1 hour. When you go to 1 hour, remember we execute. As we sit down on the 1 hour to execute, I was hoping for a high low, and then it did give me a high low. Or if price did not do that, if it did not give me a high low, I was gonna enter after this candle closes and put my stop loss below. But fortunately, price gave me a high low, right? I was hoping and praying for a high low. Wait, let me see if I'm recording. Yeah, I am. So as price gave me a high low, oh, when I saw it giving did this pin bar. Oh, I thought, okay, cool. Let me do this. This hammer and this pin bar. Well, they both hammers, you know? So I took my Fibonacci, I connected to the lowest part and to the highest part, right? I don't consider these as swing lows as some, but this is a swing low, definitely. I don't consider this one as a swing high because it does not have, well, I'll make a video on swing highs and swing lows on how you could connect your Fibonacci. But right now I'm showing you guys the how I got the buys for today. Price came between. First of all, I had also seen that okay, cool. This is a support level, and also this is additional to my confluence Fibonacci. Uh, I saw price coming between the 78 and also the 61 Fibonacci level. Understand? After I did that, I was like, okay, cool. If price is doing this, then I'm definitely going to buy. I took my thing like this. I put my stop loss right there below, right? I I was aiming for that high. I did that. After I was aiming for the high, and then price just went my way. My first TP was the 0%, then negative 27, and then also this wick right over here, this wick right over here, and then also this one, that high, that swing high. This is how it is. Basically, I have TP1, TP2, TP3, and TP4. But also what I have learned from this um setup is that sometimes yeah, it is okay, it is cool to take off your price on the table, but at the same time, if you just let price do its thing, you can actually get more. You understand? Because I did see price coming to those previous highs right over there. Right? I did see price going the way that I'm seeing right there. Price did do that, and price just swept them like that. Just took out those points that I placed just like that. And that's the lesson that I've learned today on the strategy and price. That if you just let price do its thing, just sit on your hands and or just there's no need for you to just keep on looking at the chart the entire day, which I most definitely don't do that, because the moment you do that, you are setting up yourself for failure for your what analysis paralysis. Am I saying correct? I hope I'm saying correct. When you paralyze to analyze the chart, then you feel lost and you feel like the strategy isn't for you anymore. Understand? That's how you get lost. You just staring at the chart the entire day. Because I've been there. I've been there on my first year, and I feel like on my first year, honestly, it was awesome. It was awesome. Um, because I grasped this strategy so quick. But along the way, I got analysis paralysis because I was doing exactly the whole staring at the chart thing the entire time. But overall, I hope that you guys have understood what I have placed in front of your eyes, because if you honestly can understand what I have put in front of your eyes, and I hope that I have put it correctly and in a way that you guys can understand it, because this can change your life, guys. I won't lie to you. This, if you just understand this and you can literally apply it on any type of pair that you want, whether it's gold, whether it's UJ, whether it's this, whether it's that, you can honestly apply it any type of way that you want. Understand? You can apply it on UJ, you can apply it on any type of pair. I swear, guys. I won't lie to you guys. You can apply it. Obviously, you are going to get some losses right there. Obviously, you're gonna get confused sometimes, but it doesn't mean that it doesn't work, and it doesn't mean that you should quit on it. You understand? If you love your soccer team, you do not quit on it. You're just still gonna stay and supporting it, right? If you can watch soccer or football and be like, okay, cool, I support this team, then you know that you have love for that team. So sit down and try to grow as much love as you can for this strategy and for certain pairs. And I promise you guys, they will change your life. They will make things easier. I already know what's my type of favorite pairs. I have them right here. UJ, gold, and Bitcoin. These pairs, I love them a lot. You understand? Because I understand them more, and I have stayed them with I have stayed with them for a whole lot of time. I have seen how they move. I've seen any type of way that they move, and obviously sometimes you're just gonna, forget and just not remember much about them because of certain reasons, right? But remember, any type of losses that, any type of lessons and losses and wins that you have, just journal them, put them to a pen, or put them to any type of way that you know how to journal. But I recommend you just sitting down with your pen and just journaling, because journaling on the phone sometimes doesn't really help. It's just like a phone work. But you physically writing down with the pen, do that, guys. That will help you a lot. And I feel like that's how the whole process of me learning trading has been this good, and how I've got to learn so quick in trading, because I learned so quick. On my first year, I was good. I was very, very nice. And I'm not flexing, obviously. I'm just saying that obviously you guys can also do it. And hopefully with just a couple months, like I did. Just there with like 3 months and then I was good. And I hope you guys can do the same thing. And yeah, man, I hope you guys enjoy. Cheers.